When it comes to the overall market, there are several what are termed indices which give the combined performance of many charts, of many stocks. The All Ordinaries, for instance, in Australia contains 500 shares, different companies. Now, that moves up and down, and you read that chart just like we'd read any other chart that we've been through in the last or during this course. If the All Ordinaries is in a downtrend, and we've seen that, we've watched trends before, we don't look to buy any stock until that All Ordinaries index has turned around and started to go up. If you're trying to buy stocks while the market is going down, it's like swimming against the current. It's very, very difficult. Even if you find a stock that looks very good, it's still difficult because you're actually trading against the general movement of the index or of the market. And that's where the greatest problem can come, is market risk. Most people watch stock risk. They don't take into consideration market risk, because if the market rolls over and turns downwards, it can cause all of your stocks to be stopped out at once in a bad downturn. So it pays to keep an eye on that market. And if it's trending down, you don't want to be in the market. But when it turns around to come up, you look at that exactly the same way as we looked at the weekly charts for a particular stock. And when the weekly pivot point on that, and we looked at pivot points, and on the index, you're just looking at the weekly pivot point. Don't need to worry too much about the daily, but once you've got that weekly pivot point to the upside, you can then look to buy shares. And as the market continues to move up, you can continue to buy stock. If you then find that there is a weekly pivot point to the downside, at that point, you don't buy any more shares and you just manage the stocks that you're in until the market turns around and gives you another weekly pivot point to the upside. Yes, the market can be down for a long time. There's been periods where I've been actually out of the market and not own any shares for a period of around 8 months. And that becomes pretty frustrating if you're a trader and you want to look to buy something. But the discipline is what it's all about. If the market is not going your way, you do not want to be in the market. And that way, you just have a look at the market at the end of the week. There is no weekly pivot point. Your job is finished. One of the advantages we have as small traders is we do not need to trade. So if the market's not going your way, just go fishing.